Hello friends, this is Raj Sastry from Raj Option Trading. Today is May 29th, 2023. Hope you're all doing well. In today's segment, we'll take a look at how to trade Russell 2000 index and make consistent profit. So with that, let's jump in and look at the broader market. Look from a broader market perspective, S&P 500 is in a trading range as you can see here. It's a 3-year chart. We are squarely in the trading range since 1 year. So I kind of see this trend continuing for some more time, mainly because Fed is going to keep the rates high for a while. And now we got some craze around the artificial intelligence. That's why S&P 500 is going higher as you can see here. And then you got skew is jumping higher as you can see here. As skew is going higher, you got to be careful. There may be some down risk or a tail risk, so that's why you got to be careful. Don't go too close to the money. If you're buying some if you're selling some credit spread, go a little bit lower. We'll look at those scenarios. Look from a VIX perspective, VIX is kind of stuck in the lower range. The moment VIX stays in the lower range for a while, there is some chance that it can jump higher. As you can see here, it jumped higher for a while. That can very well happen. You keep the money ready. When the VIX goes higher, you can sell some credit spreads and other option strategies we'll talk about today. So with that, now we'll jump into Russell 2000. Look, we'll go into a chart here and we'll look at a quick Russell 2000 chart and we'll go from there. Look, we'll go here. We got a chart right here. And before I go into this chart here, I will go into a plain chart to look at Russell 2000. All right, let's go into the plain chart here. I'll bring up Russell 2000, ticker symbol RUT. It's the Russell 2000 index. One of the reasons I love trading Russell 2000 is because the volatility is relatively high in Russell 2000. This is a low cap 2000 stocks, as many of you know here. Because volatility is high, it gives you very good chance to make profit by selling credit spreads and strategies that will help you to make some money selling premiums. So what I've done here is I've looked at a couple of levels here. Look, we got a resistance level at the top here at 2383, and we got one more resistance level here at 2000. And right now we are stuck around right here, as you can see here, around 1773, and we got few support levels as you can see here, 73, and we got few more here as you can see here. And look how put a 200-day moving average right here. Right now, this one is a weekly chart. It's a 5-year weekly chart. It's a 200-week moving average. It's trying to bounce off of 200-week moving average. It's right now 200-week moving average is acting as a resistance level, as you can see here. And we got here the delta 14 level here for for July 21 option expiration, which is 52 days out. It's around 1600 range. So if you're selling some credit spread, especially put credit spread, you can have this level around 1600 as your short strike, where you can basically sell and you can buy back at a lower level. We'll talk through that a little bit. And look, we got 2018 low here in Russell 2000. This is when our Fed chairman Powell increased the rates and market tanked at the lower level back in 2018. And we got COVID low here at just below 1000, as you can see here. So we got good support levels, as you can see here. I can see market bouncing up and down. That's why I love Russell 2000, especially strategies like Iron Condor and credit spread and butterfly suits very well for Russell 2000, mainly because it bounces around back and forth in the trading range. I do see market to go higher maybe in 6 months to 1 year time after Fed starts cutting the rates, but that's not going to happen soon. That's why selling credit spreads is a great strategy in the current market. All right, now we'll go into a little bit smaller chart here. I will go into a smaller chart here and I will go from there. Let's go here and go into a little bit smaller chart. All right, so what we'll do is we'll bring up IWM, which is really ETF for Russell 2000. As you can see here, we got IWM and look what's going on. We got IV rank. Look at the IV rank 29.4, relatively high. And if you see here, the volatility, the current volatility, which is the blue line here, it's above the historic volatility, which is pink line. That tells you right now it's coming down slightly, but still, it's pretty good volatility rank or IV rank compared to other indices. So with that, it's a good one to sell some credit spread. So what we'll do is we'll look at a 1 year chart in Russell 2000 and go from there. All right, let's bring up a 1 year chart in Russell 2000. All right, so let's go here. What I will do is let's jump in here, Russell 2000, and all right, so let's go back here. So instead of weekly chart, let's go here and change the time frame. I will say 1 year, or let's make it 2 year, 2 year, and let's say daily. All right, so we got a 2 year chart here, and let's bring up Russell 2000. There you go. Look what's going on in the Russell here. We got resistance level at the top, as you can see here, and we got support level at the bottom, and we got delta 14. This is where a good level to sell, a put option. This is your short leg. This is the leg that you're selling. So with that, what we'll do is we'll go back to the trade tab here to Russell 2000. Look, what we're doing right now is look, stock price or index price is 1773. And as you can see here, I always pay very close attention to the expected move, actually market maker move. Market maker move in Russell 2000, for 21 July 23 expiration is 24.43. What it means is it can go up or down 131 points, give and take. So that's the expected move. I will take you to a quick spreadsheet here. So if you look at my spreadsheet here, I got Russell 2000 right here, as you can see here, 1773 the current price, and expiration date 21 July. Expected move dollar amount is 131. That puts you your high strike at 1904 and your low strike at 16141. All I'm doing is I'm adding the expected move to come up with the high strike price. So typically, the ETF, or in this case index, will most probably stay within this expected move unless there is some tail, there is an unexpected event. And on the low side it's 1641. So if you're selling credit spreads or even buying butterflies, always make sure your short strike is around this low strike, so that way you don't get sidetracked and you don't lose money. That's why always look at this one here. And what I've also done is I've looked at delta levels here. As you in Thinkorswim platform, you can see this very well. Look, for 14 delta put is around the strike price 1600, which is slightly below the low range here of the expected move. So that's why a, a put strike 1600 is a good one here, because it's very safe because it's slightly below the market expected move. On the call side, especially if you're selling some iron condor, you got to go above 1904 here. Look, around delta 9 strike price is around 1950. It's well above the high range of the expected move. That's where you can sell if you're doing iron condor. So now, now what we'll do is we'll go back to our Thinkorswim here. Look, we have the expected move here. We looked at our levels, and for the put side here, we'll go here. Look, we got 1600 like we talked about. Look at 1600 here. 1600, look, there is a very nice open interest here, 1220. and we got some good volume also, as you can see here. So typically when you're selling you can do multiple things here. First we'll look at selling a put spread here. If you're selling a put spread, I recommend going at least say 25 strikes. So if you see, or 20 strikes for that matter, if you see 1600 here, this is your short strike. There's a very good open interest. And as you scan through here, look, 1590, there is a good open interest. 1580, also good open interest. I would rather go to 1580 here because it's a big product. If you just sell $10 wide, you don't make too much money here. You have to wait much longer. So you could go either $20 or even $50 for that matter. That's my favorite. You could also go $50. So look, what we'll do is for this video here, let's do $20 wide. If you have more capital, you could do $50 wide also. As you do $20 wide here, you could go to 1600 and you can say sell, and you could go to vertical. So we are selling vertical put here 1600, which is well below expected move. Look, expected move is plus or minus 131 from the current price. We are well below the expected move. We are in a safe territory right now, and we are buying back 1580 here, which is $20 wide. So let's go to 1580. Look, you're making a $200 profit here, which is very good in my mind. It's a safe way to do it. And you could go and look at the analyzed trade. Look, as you look at the analyzed trade here, I got multiple things going on here. I'll remove all these things here and go all the way back. Let's go to vertical. All right, let's go here. When you're doing an analyze trade, always go to set slices and break even and put the 721, which is your expiration date. And on top here, do the same thing. Go to 720, 722, which is the day after expiration. Look at this. There is a nice profitability here, 86% chance of profit, and your break-even point is very low here, 1598. That's why this is one of my favorite strategy here. And for the folks who are not used to Thinkorswim Analyze tab, you could do same thing in my favorite platform, which is optionstrat. Look, as you go into optionstrat here, let's go on top here, and we can build a bull put spread. And look, what we'll do is we'll do Russell 2000 or RUT, and we'll go to a short strike 1600 like we talked about. There you go. Pull this all the way here to 1600 and pull this all the way. This is what we're buying back here. 1580, $20 wide spread. Look, we are making $200 credit, and our estimated margin is 2000, which is really distance between these two strikes, and actually it's 2000 minus 200, which is 1800, but it's close enough. And your maximum loss is 1800, which is really the width of the spread minus the credit received, that makes it 1800. And your max profit is 2000, which is the money that you received. And look at the chance of profit, it's 91%, which is great. As long as RUT stays above 1598, you'll make money. So with that, let's jump in here to look at this properly. You can just move this around here. As you shift this, you'll see better here. Look, this is your short strike, as you can see here, and that's your that's your short strike. So as long as stock stays above this, you will make money and you can keep the price, and your break even is right here 1598 because you received $2 already. So that's the profitability here. I love this trade. It's a very good one here. And many times you want to be a little bit adventurous, and you might want to convert this to a iron condor. We can do this very well. Look here, if you sell put spread, you'll make 91%. As you can see, the chance of profit is 91%. You'll make a $200. Now what we'll do is we'll see if we can add a call spread also and convert this to iron condor. So what we'll do is we'll go back here to our trade tab here, and we'll basically cancel this. I will say delete. And what we'll do is we'll do a iron condor. So for iron condor, I will go here and say sell, and let's just say iron condor right here. And look, we got 1600. We'll do $20 widespread like we talked about, 1580 right here. And on the, that's the reason we are choosing 1600 is look at the open interest here, very nice. And even 1580, it's good open interest, which is good enough, and good volume also. On the call side, we'll go to delta 10. I don't want to be here on the call side because there's a chance that stock market can go higher. It always has got a higher drift, as many of you know here. Look, we got a nice open interest here at delta 9. Look, delta 9 at 205. I will make sure this one is my short strike here, which is 1950. I will go here to 1950 and sell my sell my call option here all the way to 1950. There we go, 1950. And we'll do same thing. We'll basically go to 1970 here, $20 widespread, and that's got good 50 open interest, which is good enough here. So 1970 is where I'm buying. So buying my protection here, 1970. All right, so look, see, it's a very good way of doing it. Russell is stuck in trading range just by selling iron condor here. You're collecting a $330. Look for the calls put spread. We got $2 or $200. For the call spread, it's $1.30. Total, it's 330 for the iron condor. And if you confirm and send this one here, look, we are making $330. And if I go back here, look at my analyze tab here, analyze the trade, and go all the way back here. Let's remove vertical and iron condor. And I think we got everything right here. Look, we got 86% chance of making profit, which is great. I think this is a good strategy here for index like Russell 2000 and even S&P 500. It's a great strategy because this is stuck in trading range. And I could go here to my this platform here and do same thing here. Let's go here. Let's open one more tab here and say iron condor here. Let's see right here. And we'll say RUT here. We're doing the iron condor this time. And our short strike, as you can see here, let's go to 1600. That's our short strike. And we're buying 1580 right here. And the call side, we are going all the way to, let's see here, on the call side, we are at 1950, 1970, that's what we're doing. Let's go all the way here. 1950 is where we are selling, and we are buying back 1970. That's our production, as you can see here. All right, look, we are making $330 as you can see here, and our chance of making profit is 79%, as you can see here. So just to contrast this with the just the put spread, I will also make this a little bit better looking here just by pulling this a little bit. Look, that's my iron condor here. We are right, nice balanced iron condor. As you compare your put spread here, look, we got the put spread here, bull put spread. Chance of profit is 9100. We are just making $200 just by adding one more call spread here. Look, we are now making $330. That's why it's one of my favorite strategy. Market oscillates up and down. When you do a little bit wider, iron condor in this case, $20 wide. You can even go higher. You just don't do $10 wide. I mean, you can do it, but it takes time to make money the moment your strikes are lower. And one of very good the good practice is to look at the price of the ETF, and if it's $100 price, typically $10 is your suggested width of the spread. So in this case, it's a big product here. I would probably go to like say 20, 25, 30 or 50 and stay around 50 range. Don't go too much over because it's a little bit risky at times. I would stay around 25 to 50 your spread width or wing width in case of iron condor, or even a put spread. So this is my second favorite strategy. Just by adding, a selling a put spread and by selling a call spread, you're making more money. As you can see here, even though your chance of profit drops slightly, as you can see here, just the put spread chance of making profit is 91%. Just by adding a put spread and a call spread, which is iron condor, your chance of profit slightly came down, but you're making more money, as you can see here. But look, your max loss, which is also same as your margin power required, is same for just the bull put spread and iron condor both, or even for iron condor it's a little bit less because you're collecting the credit from both sides. So it's a $20 wide spread minus your 330 here. That makes it 1670 as your buying power reduction. So I think that's why it's a great from a buying power perspective also, and from a profitability perspective. This is my second, this is actually one of my primary vehicle to earn profit on a regular basis. And third way I typically do is really butterfly. Butterfly is also one of my go-to strategies. So let's jump into butterfly here. For butterfly, you can be a little more aggressive. What I typically do for the butterfly is, let's go back here. For the butterfly, I typically go a little more aggressive. I go around delta 20 or so, so that way I can collect some more money. And this has got a little more protection also. Let's go to butterfly here. So if you go to butterfly here, look, delta 20 here on the Russell, there's a nice and high open interest, as you can see here. I can choose this one here. Let's do butterfly. I can say buy butterfly, and look, we got butterfly right here. All right. Typically, I like a broken wing butterfly. That's my go-to butterflies because you can get some credits from the get-go, and the profitability of or chance of breaking even is higher for the broken wing butterfly. That's why I like this strategy. All right, so we got 1650 here, nice and high open interest. And as you scan through here, look at down here. Look, we got nice open interest here also, which is 1630, which is a $20 wide spread. You could take this also here, $20 wide. We'll play around this slightly and go from there. So look, on the higher side, we got 1655 here, which is very close. We got some open interest here. I would even bump it up to 1660. There is also good open interest to 109 here. Let's make it, the put that we are buying, let's make it 1660 here, or 1660. Let's go right there. All right. So look, we got 1650. We are short 2 at 1650, and we are buying protection at 1660. We got good open interest, and we'll break the wing here, and we'll go 20. We got 10 on the higher side here. We got 20 below. 1650 minus 20 is 1630. Look, we are going there. Look, we're getting $1.05, $1.05 or $105 credit for this butterfly. And what you can also do, one of my favorite ways, really expand this a little more. For example, instead of 1660, I could make it to 1670. Look, we can do this right here. 1670, it's a $20 wide, as you can see here. And on the put side here, on the lower side here, we can also do, instead of 20, we can make it 40. So we can make it 1610. Look, right now, look, now we are collecting $200. And if you confirm and send here, look, our buying power effect is 1801, which is great. And we are making, look, we are collecting, as you can see here, $2 up out of the gate, which is $200. Look at the max profit. I like this picture here. Your max profit is 2000, max profit potential is 2200, and your break-even point is 1628, which is also great. So with this, what we'll do is, we'll take this one to analyze trade tab, analyze trade here, and go from there. All right, let's go all the way here and let's remove this iron condor, and we got our butterfly here, same expression. Look at this butterfly here. Look, chance of making profit is 86%. I like it. And look, as if the stock comes down, if the Russell 2000 comes down, I make more money. So look around this level here, around this level 1651, I make a lot of money. If the stock comes around these levels, I make more money. That's my lower break even. As long as it stays above 1628, I make money. That's why it's one of my favorite strategies. And what we'll do is we'll take this to optionstrat platform here and create the butterfly. Let's go here and I will say optionstrat.com, and let's create a butterfly here. All right, let's do butterfly and go from there. All right, let's do a broken wing put. We got put broken wing right here. Uh, we'll do rut Russell 2000, and we are, let's see here, our short strike is at 1650. Let's go to short strike 1650 here. All right, and we are buying back protection at 1670 right here, and we are breaking the wing here and going and buying at 1610, as you can see here. So we are making $200. Pretty good money here. So this is a great way here. So what I also do many times is you do the moment you do two ways here. You can basically sell a butterfly on the bottom, that's the put butterfly, and you can add a call butterfly at the top here, so you can make money both ways here. Look for this butterfly here. The chance of making profit is 86%. This is a great way of making money here. So with this, let's go back here to this one here. And what we'll do is we'll basically sell a call butterfly also. I will change this advanced order here and just say blast all, so that way I can add one more here. All right, so here we'll go here to, let's look at our delta. I can go to delta 15 here, so that way look at a range where there's a nice open interest here. Look on the 15 here, there's not too much open interest. I could even go here. There is some good open interest here. I don't want to go too close to 20. I could go here also 1900. Not too bad. I could go to 1900 also. Let's go here to 1900 at delta 20. That's good enough here, or delta 19. So I could go here and buy a butterfly here. All right, so we are buying a call butterfly, as you can see here. And we'll do same thing here, 1900. And we'll do when you're buying the protection here, we are buying one on both sides here. So what we'll do is we'll do on the lower side here, we'll go 20. So 18, instead of 1870.95 here, let's go to 1880 here. All right, so 1880, 1900, that's 20. On the call side, where we are breaking the leg here, let's go and say, instead of 1900, let's say 1940 here. So that way we break the leg and go double. So we got 20, 20 here, 1900 minus 20, 1880, 40 here. Look, we are collecting some credit here, which is the $1.30, as you can see here. So we are actually making 2 plus 3, which $3.30, which is good enough here. So what we'll do is we'll basically analyze this one here and go from there. Let's go analyze tab here, analyze trade. Look, we got our butterfly, both the butterflies here. And what we'll do is we'll make it close by here. 1650, 1670, and we got other one, so that's good. And we got everything is set to go here. Just want to make sure we got everything properly here. Look, we got two butterflies, 1670, 1650, that's good. All right, so I think we're good here. Trying to see where is my other side of the butterfly here. All right, so what we'll do is we'll as you figure this out here, 1650. Let's uh, let's go to our platform here and look at option strat here in the meantime. So, so we constructed one butterfly here. We can construct one more butterfly. Let's open one more tab here so we can compare. All right, let's go to option strat here. We are building a butterfly, as you can see here. Let's go here and say put broken wing put here. All right, so let's go construct this butterfly very quickly. 1600 here, and we are doing 1640 here on the top. 1600, we are buying 1560. That's $40, and on the production side here, 1620. There we go. So we got 140 here, 1600, 1620, and 1560. So we got $1.40. Let's make sure it's the same thing here. 1650 here. Let's go to 1650. One to 1650 and 1670 and it's 50, 1610. There we go. One more. There we go. We are collecting $200 as you can see here. And what we'll do is we'll add a call butterfly here, and look, we are doing the call butterfly at let's see here. Oh, I see what's going on here. So call butterfly. Let's fix that anyways here. Call butterfly. I think I did the put on here. Let's do call butterfly. Let's actually remove this here. All right, let's go back here. The reason it didn't show up is for my call butterfly here. I have to analyze this one here. There you go. Now it shows up as you can see here. We got both the butterflies. That's a nice looking Batman view as you can see here. Nice looking Batman. So as long as the price stays between these two, you'll make money here. You got your break even 1628 on the lower side, and you got one more break even on the higher side. Let's actually say break even here. Let's set slice to break even and 722, which is good right here. Okay, there we go. We got our two break-evens on the higher side. 1923.57 is the break-even. Lower side we got 1626 is the break-even. It's good to see this in our option strat here. So we got one side of the butterfly here. Let's construct one more side here. On the call side, what we're doing is let's see here. On the call side, we are doing our short strike is at 1900. Let's go to 1900 here, and we can just oops, 1900. All right, so 1900 we can right click here and basically say sell 1900 call. All right, so we can go here and we are selling two. Actually, let's -2. There we go. And now we want to basically make it a spread. We are actually doing 1900 and going to 1940 somewhere right here. You can right click here and say buy call. We are buying a 1940 call. All right, so here we can quantity, we have already got it. I think it's good here. And on the lower side here in 1900, we are doing 20 below here, 1880. At 1880, we are actually buying a call. All right, so let's move it up here, 1880. All right, so we got our call. This is a call butterfly, as you can see here. And let's bring it up a little bit so you can see properly here. There you go. We got a nice Batman, as you can see here. Look, our net credit is $330, as you can see here. Our max loss is 1670. Look at the max profit potential, very good here. As long as the stock fluctuates between these levels, you can collect your maximum profit, your profit $330. But if it goes down here and stays here, or stays right here, you'll make more money, as you can see here. That's why this is one of my go-to strategies when it comes to ETF, when it comes to index like Russell 2000 and S&P 500 especially. On the Nasdaq or NDX, I would rather do iron condor or even put a bull put spread. But on the Russell and SPX, this is one of my favorite strategies because you can stay a little more closer. Your short strikes on the call and put can be 20 delta because you have some more extra protection here and you can make some good money here. So that's why it's one of my favorite strategy. And look, if you compare this one here to just put butterfly here, look, if it is just put butterfly, you just make $200. If you just add one more call butterfly here, you make 330. And look at your chance of making profit 70%, which is also great. So with that, just to sum it up here, right? So always pay attention to the the expected move, your short strike, especially if you are doing a put spread or iron condor. Make sure your short strike is slightly below the expected move. Just like we have done here in our spreadsheet here, we got the current Russell price here 1773. Expected move is 131 for 21 July 2023. So that makes your low range around 1641, and we our short strike is actually 1600 here. That's where we sold our short put. So that's the good strategy here. On the call side, also same story. Look at the high expected range here, 1904, and look our call here is 1950, which is a short strike, which is above the expected range here. That's one of the ways to really make some money here. Basically stay outside of the expected move. Make sure short strike is outside the expected move. That's one of the good ways, good measure to keep your profitability higher and consistently make money in the market. And look, from a charting perspective, I always draw few lines in the chart. As you can see here, I know where is my delta. On the call side, delta 9, it's around 1950, as you can see here. On the put side, delta 14 in this case, which is a high open interest, which is around 1600, as you can see here. As long as, you don't need to be fancy. As long as you draw few levels here, I got, high, high resistance level, one more resistance level. I got two support levels, and I got my delta 9 on the call side. This is my short strike, and I got my delta 14 on the put side here. This is my short strike for the put, and I want stock to oscillate between this range here, which has been doing for a while here. That's when you make some killing and make some great money profitably. The reason I do a lot of these index options is because there is a very good tax advantage, 60% long-term tax bracket and 40% short-term tax bracket from a capital gain perspective. Much better compared to stock option. Index offers very good preferred tax advantages because of its 60% long-term tax tax treatment. So with that, thank you so much. Please subscribe. Happy trading. Thank you.